Welcome to the Secrets of College Planning. I'm your host, Anthony Uva, and today we're going to get some insight into financial aid and student loans at the college level. My guest today is Christine Roberts. She is the head of student lending for Citizens Bank, and welcome to the show.
Morning, Anthony. Thanks so much for having me.
Yeah, usually I start my guests where they went to college. So where'd you go to school?
Well, I did my undergraduate at what was then Bentley College. It's now Bentley University here in Waltham, Massachusetts. And then I went on and did my graduate work at Northwestern in Evanston, Illinois. So a few years between the two of those, but two, fabulous schools. And, I'm fortunate I've gone back and actually taught at Bentley a bit as well. So, just love to be part of the whole college the college feel and, being around folks who are learning and growing. So it's awesome.
Great. So let's just go back in time a little. When you were in high school, when did you start thinking about going to college? Was it freshman year of high school, senior year? When did it all begin for you?
Funny enough, for me, I was probably a little different. I was very creative, very much into the arts and musical theater, and thought, I'm going to go take Broadway by storm. And it wasn't really until my junior year when I realized I probably should have a plan B. And so I really started looking, my junior year. I was a little young. I graduated high school when I was 17. And so there was, I think a lot of consternation about, me going away so young and, but was really looking for a school that, could let me use my creative side, right? Majoring in musical theater really wasn't an option in my family. And so, I went to Bentley, which was predominantly a business school. And majored in marketing with a minor in computers back in the day when that was just starting out. But really looking to kind of bring together that creative side with, the business side of things in order to use it in a way that was, still using the whole arts component, if you will, or the creative component, but in more of a business setting.
Gotcha. So now you're at Bentley. How does one go, and what did you feel about the school when you got there?
It was great. It was a small school. I came out of a very small high school. I came out of a small private high school, and so I very much liked the closeness of the campus. It was a lot more one-on-one attention with your professors. I loved being close to the city. We had a shuttle that allowed us to get into Boston. I absolutely loved, exploring Boston when I was in college. And we were just kind of starting up the rung of some of the sports things, which I think was good. I think if I step back now, now that I had the alternate experience of going to Northwestern, right, which is a huge sports school as well. Loved going to the football games. The year I went to Northwestern for graduate school, we went to the Rose Bowl. And so, talk about like two diametric, experiences. But I think Bentley did a phenomenal job of really preparing us to be out in the workforce. And they're still ranked one of the top from getting people into their careers, and their job placement numbers are absolutely stellar. And so I think about it being, the right school for me. It was far. I grew up in Miami, Florida. And so, they put me in the international dorms because I'm not quite sure they knew what to do with me. But, I just think, college was a phenomenal experience to grow and to do different things and try different things. Although I spent a lot of my time in the theater group, go figure. But it also gave me a chance I was part of the judicial committee, school government, just really getting involved in, running the American Marketing Association, the collegiate chapter. So really using, and taking advantage of all the different things that you can experience at school, which to me really set me up more for going out into the workforce than just the academics.
So now, after going to Northwestern for graduate school and graduating, how does one go from there to becoming the head of student lending at Citizens Bank?
Well, it's really funny. If you look at what we had, we called them career jackets. I don't know about you, Anthony, when you were in school, but when I was coming out of undergraduate, my career jacket in bright yellow, and every time I go back for what we call mentoring moments, back at Bentley for folks who have graduated, it says in bright yellow at the top, "We'll do anything but banking." So I always counsel people, careful what you say on those things. Because that was really kind of a big thing in my family. My grandfather was not really supportive of my sister and I, his only two grandchildren, going to college. He's like, "You're girls. What do you need to go to college for? Go work in a bank. You'll be fine. You're going to get married, have kids." And so my sister and I both like to laugh now because she runs a mezzanine finance fund and I run student lending at a bank. So we kind of did what he wanted, just a little bit differently. And when I came out in the job market, which I think is so relevant to today, I really wanted to go work in advertising, and so got a job offer in advertising for $12,000 a year, and realized that I needed to pay rent, eat, little things like that. And the Bank of New England was looking for somebody who had computer skills, which was what my minor was. And so I went in to the bank thinking I was only going to be there for a year or two until the market kind of turns around, and then I'll go do the marketing thing, and the world will be good. And 30 odd years later, I'm still here. So and for me, it was an interesting journey. I spent the first 7 years really on the institutional side, so using a whole other portion of my brain that I wasn't sure that I was going to use, quite frankly, right? I really wanted to use the creative side, and wound up as a treasury analyst, a commercial paper trader, non-performing debt portfolio acquisition. So went way to the other side, right, of creativity, and spent the first 7 years institutional, until I realized that I was kind of at that point where either I was going to commit and stay in an institutional, or really get back to driving the passion of consumers and being with understanding consumers and marketing to consumers, et cetera. And so I went to Northwestern at their integrated marketing communications program, which is a phenomenal program housed in the Medill School of Journalism. You also do some work with the Kellogg School. Very hands-on approach, lots of consulting throughout the entire graduate program. And, really just kind of went back to what we're calling my more creative roots of getting involved in, creative marketing and a lot of data-driven marketing. It's the home of database marketing. And so really using the principles of analysis and information to drive customer contact, communications, conversions. Did a little consulting after, and Fleet, who had bought Bank of New England, called me up and said, "Hey, you did all this great work on the institutional side. Why don't you come and work on the consumer side now and put all these things that you've done into practice?" And so, for me, I worked through a lot of different product and marketing areas within financial services. So I've been on CDs and IRAs, I've been on checking, home equity, mortgage. I've done investments, direct and database marketing, product development, product management. And so for me, it was really all about the different experiences to be able to build my own warehouse, right, of information. And I have found that with every product that I have worked on, every avenue of communication, every channel, I've worked on retail strategy and delivery, really just taking all of those pieces and putting it all together to then arrive to the point where, almost 5 years ago now, I was asked to step in and run student lending, which I have such an incredible passion for this business. I think it's one of the places where we are really helping families, helping individuals, really begin, the exciting next chapter, right, of their career of what they really want to do. And, I always tell people, you can, in this day and age, right, you can rent a house, rent a car, rent a wedding dress, but you can't rent a future. And so, what we do is we really work to converse with families about how to pay as little as possible for your education, right? You want to go to the best school that you can, but you also don't want to come out of it so mired in debt that you're not able to really enjoy that next phase, right? The beginning of, being young and out in the workplace and, the things that you want to do. If you're so worried about paying, ridiculous amounts of money in debt payments versus making good decisions going into school, we want to be the company that helps you kind of think through that a little bit more. It's not just about I love the buildings, or I look great in purple, or and believe me, I hear some of these things, right? I hear from parents, Johnny fell in love with this school, so I have to figure out how to pay for it. And what we want families to do is say, what's the ROI, right? What am I going to get? How much is this going to cost me? How do I use it to my benefit without making it a detriment to my future? And so, I've spent the last, like I said, almost 5 years, ramping up our in school. We have a whole high school curriculum now. We have a great partnership with EverFi, where we've just launched in 500 high schools
Wow.
for, high school kids to have that conversation, right? We call it the other conversation you have to have with your kids, because if you don't, they are going to wind up with a 20-year debt that could be more than, quite frankly, my first mortgage on a condo in Boston. Right. And so, we really want families to have that conversation with juniors and seniors, mostly juniors, right? Starting sophomore, junior year, to say, here's what we have financially to support you and your college, right? And here's what we can do. Oh, by the way, here's what we're expecting you to do, right? Do you need to work in the summer? Do you have to contribute certain amounts of funds, scholarship and grant applications, things that we want you to do to help contribute to bringing down the cost of college. Because, also typically in most families, there's more than one kid that's going to go to college. So that money has to get, parsed out to the different children. And then really work on understanding what is the process, right? How should I look at schools? We also have a great partnership where we've launched a tool with EdMit that allows you to go in and put in, here's the type of school that I'm looking for. Here are my interests, or the degree that I'm looking to get. Here's my family's financial picture. Here's my academic picture. And then, oh, by the way, here's some schools that I'm already interested in. And it comes back and it gives you a comparison to say, all right, Christine, you want to look at Bentley and you want to look at Boston College. Well, it's kind of like the Amazon tool. People who look like you typically get this financial aid package. So this is what your net price is going to be that you're going to have to figure out how to fund. And then, by the way, if you major in marketing at Bentley, this is the typical starting salary from Bentley at that point, so that you can go back and go, if I have to borrow, $100,000 over 4 years to go to school A, and my starting salary is 50 grand, or if I go to school B and I only have to borrow $30,000 and my starting salary is 48,000, there's a much better financial decision there, right? And so we're really trying to put tools out there for families to make those decisions before they get on the other side of 4 years and go, I didn't realize I borrowed this much and now I have to pay it back. And we get that, right? We put a survey out 2 years ago, and 65% of recent college graduates, we talked about 1,500 recent college graduates, 65% of them did not realize how much money they had borrowed to go to school.
Wow.
And of that 65%, 70% said, had they understood what they were borrowing and what that would mean for them from a payback perspective, they would have made a different choice as to where they went to school. So we don't want buyer's remorse when it comes to such a big commitment.
So tell me, when people come to Citizens Bank, what's the process that they take with you? How does it all start? How does it all work?
Sure. So we have two different product areas. One is in school, right? So very, very much a part of the audience that we're talking to today. We also have an education refinance product. So I'll talk about that one a little bit separately. Really, people can get as much help or as little as they want. So if they want to, they can pick up the phone, call our call center. Our customer advisor will be happy to walk them through, either talking to them about their award letters or what do they need, what does it mean for them, talk them through whether or not you want to have your child take out the loan and you're the co-signer, right? So in about 95% of our in-school loans, we'll have a co-signer. It's very difficult to underwrite a 17-year-old's credit file, right? And so, you will actually lend, if you will, your credit score to your child. So we'll actually underwrite based on you, so that we're going to use your credit profile in order to get them the best rate possible. So is that one way for you to go? Or do you want to take out a loan as a parent and not have your child involved in that? The upside for, the former is your child begins their own credit file, right? Because they are primary to the loan. It allows you to provide support to them should they need it and help keep them on track with paying their loans, because we all know how important that is. And then what it also allows is, after 36 months of on-time payments, you can apply for a cosigner release. So don't think about it as you're committed to 20 years on this loan. As soon as your kid can stand up on their own 2 feet financially, they can assume total responsibility to the loan. And so it's just our way of helping, like, families kind of get moving. The other thing that they will help you think through is, do you want to be on a full deferral? So make no payments until you graduate. Do you want to do an interest only payment while you're in school so that you're not accumulating additional debt? Or do you want to go into full repayment day one? So there's lots of different options there for you to talk through, and we're happy to help you through that. Some people don't want to talk to us. They can do the entire thing online, soup to nuts. We also have chat functions, so that if you're in the middle of something, you don't want to have a big conversation, you just want to have a little chat, you can do that as well. Or for us, if you're within our footprint, you can also go into our branches and talk to our bankers about it. So there's some people who really just want to sit and have a face-to-face conversation, because this is a big deal. And so we try really hard to support whatever it is that the consumer wishes to do. We have tons of information and articles, on our website. So if you want to just, read and shop and compare, we've got tools for you. You can compare award letters. We have loan calculators, like anything that you would need to get through the process. And like I said, we've got the Admit tool, which I think is a phenomenal tool for us to really help families make good decisions all the way through the process. Separate from that, we have the education refinance product. So that is either if you have separated from school, either not finished or finished, and you've been working, and you can now, what I would say, use your own credit file to buy down your rate, right? So you refinance just like you would any other type of product. Where I think this is really relevant, Anthony, sorry, for your audience, is we have a parent refi as well. And what the parent refi allows you to do is that even if your children are still in college, you can still refi. And I think a lot of families still don't realize that there are options outside of federal borrowing. So if you took out a Parent Plus loan, which by the way came with a 4.25% fee, which everybody seems to forget about, your rate is based on just a statistical, like, it's an average, right? So the government has to have a one size fits all rate. So if you've got a good credit file, our refi is anywhere from 200 to 300 basis points better than the average Parent Plus loan. And so you could actually come in, we allow you to consolidate Parent Plus loans. So if you have several children who graduated or are still in school, we allow you to consolidate the Parent Plus loans and refinance them into one loan at the lower rate. So again, we want families to pay as little as possible. So even if you've taken out loans, we're trying to give you options to pay it down.
Great. Now, you talked about federal loans as well. Other people have been on the show before. They talk about a bank is like the last resort before doing loans. Is that correct? Is there something about federal loans compared to going to banks
Yeah.
that's different?
So Anthony, I think that's a great question. And I'm not saying no, don't go to federal loans, right? I'm saying look at all of your options. So there are certain loans. There's the Stafford loan, which is in your child's name only, right? Or in the student's name only. And it's a very controlled loan. So it's a graduated loan over the 4 years of school. So they would get $5,500 the freshman year, $6,500 sophomore year, and then $7,500 each for junior and senior year. Taking out a Stafford loan, either 1 year, all 4 years, in your child's name is like they are always very low interest, no fee, and it allows your child to start their credit file. So even if you can pay the whole thing, I always recommend that the child takes at least 1 year of it so that you're beginning to get them a credit file. Because Anthony, you and I both know, right? You can't get credit if you don't have credit, right? And so that is one way to help your child, kind of move forward from a financial file standpoint. Then is when you really need to step back and say, okay, what is it that we need as a family? How much do we want to pay? There is the Parent Plus. Many schools will package the Parent Plus, which I'm not a fan of because I think it's just, it doesn't, I think schools should be out there saying, by the way, and they all have, most of them have lender lists as well, and they should put the Parent Plus loan in the lender list and say, go check it out, right? With everything else. Because if you do have good credit, you can get a lower rate. We also have different terms in the federal government. So again, federal government, one size fits all in rate, one size fits all in term. It's a 10-year loan period, right? 10-year fixed rate loan. We have for in-school 5, 10, 15-year, we have fixed and variable. We have for the student, again, P&I, interest only, fully deferred, right? So we've got more options, and in many cases, you could get a better rate. Now, if you're feeling that your child may need one of the two federal benefits, right, that the private loans don't have. So private loans, we have deferment if you go back to school. We have forbearance if you're in financial hardship. We have loan modifications, right? We have, we waive on death and disability. So we have almost many of the same benefits, better rates than the federal government. On the federal side, there are two things, right? Number one, if your child is considering to be in a not-for-profit, right? And this is the child themselves, by the way, this does not apply to the parent loan. But if your child is going into medical, teaching, not-for-profit, if they're going to go to law school and they want to work in the district attorney's office, if they're going to work in the government, in all of those cases, they could get public service loan forgiveness, which is a 10-year process that you have to be very much on top of. But we always recommend that families look at that, right? And see whether or not that is something that applies to them. The second piece of it is income-driven repayment plans. And while we are not fans, nor are the prudential regulators fans of income-driven repayment plans for long-term use, it may be something for the first year or two that could apply depending on what your child, number one, is majoring in, and number two, how much money they're borrowing, that it may make sense for them to be on an income-driven repayment plan. And so those are things that you should consider. Again, we're happy to talk families through. If the right thing is for a family to borrow from the Fed, they should, right? And we'll tell them that. But if we think that we can do something better for them, then we want them to know that option as well. So no, I don't think the Fed is the end all be all. I also struggle with the fact that, we're talking, so much about now it's almost $1.7 trillion in outstanding student loan debt. I think people would be very surprised to hear that 92% of that is held by the federal government.
Wow.
Right? So we, the private industry, are only 8% of the market. And so, and all of that is done without underwriting, ability to repay. And I think that, I think some families struggle unnecessarily because the government is allowing borrowing up to the cost of attendance. And, not for nothing, when you have something that is a blank check, then universities go, oh, there's a blank check available to every family. So let's put in the new coffee bar, right? And now we're going to have to take prices up. And so if you go back 30 years, the Parent Plus equivalent had a cap on it. and families could only borrow up to a certain amount. And, um, you know, cost of attendance was keeping pretty much in line with the consumer price index, give or take. That cap went away 30 years ago. Consumer price index has gone up about 250%. Cost of tuition has gone up 1,250%.
Wow.
So I'd love to see some of that come back in, but that's a whole other conversation.
So we're coming to the end of our show. Usually I ask my guests, what advice do you want to give to the families that are watching and listening to the show? What advice do you want to give to those parents and those students?
Yeah, I think my advice is, talk to your kids. Really, really talk to them about your finances. I know it's something that we've all sort of been brought up to be a little taboo, right? We don't talk to our kids about our money. But I really recommend that you sit down and you have a conversation with them about what can you as a family afford, that's not going to put your retirement in jeopardy, put their future in any sort of financial peril, and really, really look through and understand, what's the return that you're going to get for the degree that you're going to get, the career that you're looking to go for, and work through that with your kids. We have all the tools to help you with that. We have seminars that we'll do as well to help facilitate that conversation. So reach out, let us help where we can. And what I really want is for families to make great decisions before their kids go to college, so that college is an incredible enjoyment, and there's not a regret on the other side.
Great. Well, thank you very much for coming on the show. I really appreciate it.
Thanks, Anthony. Thanks for having me. And I hope you have a great holiday, and, everybody stays happy and healthy.
Great. Thank you very much. So you've been watching The Secrets of College Planning. I'm your host, Anthony Uva. Until next time.